All right, well, let's take a look at what the markets are doing now that we're trading for about 45 minutes or so. Let's take a look at this corn market with our quotes provided by Bar Chart. Here we go. On December, the new crop month. And by the way, let me remind you, today is actually first notice day on September contracts today. So everybody is having to bail out of them. December is where all the action is, and right now it's down 3 1/4 cents. We're at 477.5 right now, and that's just one tick off of its low of the day at this point, and we're now about 7 cents off of our overnight high. So a lot of weakness in the corn market here as we head toward harvest. You have November soybeans currently at 13.82 1/4. That's down 4 1/2 cents, even though we had some strong export sales. Another overnight sale to China mentioned, and we're lower anyway. It doesn't seem to really help too much these days. We're 9 cents off of our overnight high at 13.83 right now. Let's look at the wheat market. And in Chicago, December wheat, we're down 8 1/2 cents at 5.98 so we're back under that $6 mark again. And in Kansas City, December down 11 1/2 at 7.20 1/4. Man, it's just nosediving toward that $7 benchmark here. We're 20 cents from it now. Okay, on Minneapolis wheat, we have December down 12 3/4 at 7.66 3/4 off of its overnight high by 13 cents. Wheat market can't seem to find a friend these days. In the cotton trade, we have December new crop cotton now 30 points higher, and it's above 88 cents. We're at 88.18. So maybe that hurricane that went through the southeast, maybe it did have a little bit of support to the market here. We have Chris Swift with us, and he is with Swift Trading. He is based in Nashville. Chris, thank you for joining us here. A lot of pressure in the markets here as we go through a Thursday. It's the final trading day of the month. How significant is that?
You know what? I don't think a whole lot. We've seen the markets up and down this week pretty good. And if we think about it from Monday's gap up, then the bean market, that's kind of where we stayed. From the gap up, we've remained in that upper level there. And again, I think we're really probably 3 to 5 weeks away of knowing what the real bean crop is going to be. We've now seen more evidence of some beans dying up in the higher levels of the fields. We know that some places are going to be excellent. Down south here in the southeast, you couldn't ask for a better bean crop. But up north, where they produce the majority of them all, there tends to be a little bit more trouble with them.
Yeah, the reports are, as the catchword is this year, extremely varied all across the Midwest, especially if you go into Iowa, from what I understand. That kind of begs the question, what will the quality be like? I remember having droughty years with soybean crops, and a lot of times some of those beans are so small, it's hard to get the combine set. If you try and set the concaves close enough to get the small beans out of there, you crack all the bigger ones, and then you get docked for that.
Yeah, there's not an easy answer to this whatsoever, and because it does vary so greatly, basis is probably going to be a very big issue again this year in beans, where it was corn last year. Corn, we were so short this year. Corn was so short, we've seen basis really, really high in most areas there for corn. It's starting to shrink back a little bit, but if we fast forward and we go forward out there, beans are the ones that are going to be short going forward. They're already trying to teeter back and forth on the carry charge there to it. So I think if we look out there that the bean market is probably just kind of 2 or 3 weeks away from really knowing what it's going to be. So I don't think you're going to drive them down too awful hard under those aspects. And you may not rally them too awful much either until you get some more definitive information.
Chris, they always say the cure for low prices is low prices. But when is this wheat market, if you look at a 6-month wheat chart, when is this market going to be healed anyway?
Probably not for a while. You just are starting to break down underneath the May lows in both Kansas City and Chicago. You paused there for about 2 weeks at that 720, 750 level. Now you're starting to break down below that. You know, a lot of wheat, we trade a lot of wheat $4 and $5. So I don't think this is anything too awful much to look at. And we know that we've got plenty of wheat. We know that it is being undermined by Russia. And the wheat seedings this fall are going to be enormous.
Okay, we'll come back in a moment and take a look at what the livestock trade is doing here on a Thursday. We had some big export sales on pork. We'll see what the market is doing when we come back. Flipping the page, let's take a look at our livestock trade with up-to-the-minute quotes provided by Bar Chart. We begin with live cattle, and taking a closer look, we are higher across the board if you go past this current August contract. You have October now 40 cents higher. We're at 180.45, and December now 20 higher at 184.42, so they're rebuilding a little bit of strength after they kind of collapsed yesterday. Feeder cattle are firmer, but it's not a runaway train. We have the September contract 37 higher at 253 even, and October now 62 higher. Well, heck, we have October and November and January all over 60 cents higher. Not necessarily a bullish sign, though, when it's the deferreds leading the way. On lean hogs, you have October up a dime at 83.70, December 15 higher at 75.25. The reason, even though it's not a big move, the reason it's important is we had the big move higher on the close yesterday, and we opened lower, but it has reversed out and turned higher here. Chris, let's bring back Chris Swift. What do you think about that? Is that a positive development here on the hogs?
You know, the hogs have been really volatile. $2 and $3 trading ranges just about the last 3 or 4 days. They have been up and down. The seasonal tendency tends to be a little bit firmer for hogs here. And so maybe since we had that initial probably $6, $7 rally, now we've consolidated. Maybe that's what we see all this volatility is, just consolidation. Maybe start to push just a little bit higher. We saw hog weights down just a little bit. We know that the pork market has been in better demand now simply because beef has been so high. Consumers are seeking alternative protein. So I'm not negative the hog market, and especially with it carrying fairly significant discounts to the index.
Great stuff. Well, thank you, Chris, for joining us here today. Chris Swift of Swift Trading, based right here in Nashville.